If you're a business owner or senior manager, you probably had more than enough about all the wonderful opportunities awaiting you in the era of digitalization.
Whether it is big data, cloud, data science, or whatever buzzword is currently trendy.
If you would like to hear someone dissecting these claims and showing you what it actually takes to improve business processes, you're in the right place.
This is Between Data and Risk, where we discuss real-life examples of what works and what doesn't in the world of business operations. Hello, I'm Artur, Cognition Shared Solutions Chief Risk Officer, and with me is my co-host, your friendly neighborhood data guy, Dr. Marian.
Hello, everyone.
Welcome to the third episode of Between Data and Risk. Today we'll be talking about nurturing new businesses and startups into viable enterprises. And we're excited to have with us our guest, Yuchen Chan, who is the founder and managing member of Redpoint Holdings LLC, and has agreed to share some of his experiences with us. Hello, Yuchen.
Good morning, gentlemen.
So, Yuchen, let's start with a question to you, a hypothetical question. Let's assume that we have a business, a startup. We have this brilliant idea, and we come to you to present it, to pitch it. What would you be looking for in the idea and in the team to give you a hint whether it's a viable idea, viable business, and whether it has any chance of success?
Well, first of all, I would ask myself, is it a business that I can understand, first of all? If it is something that is relevant within my realm of knowledge, and they are, a set of founders who I can relate to, because why would I spend time chatting with strangers about their viability of business? That's question number one. And if it's something where I think I can add value both to my own intellectual curiosity, as well as maybe understanding a little bit more where this company wants to take it, right? So that's the beginning of every nice conversation, I would say.
So you wouldn't if the first kind of is not to present any ideas that are otherworldly or kind of strange in a way.
Unless they fall into Yuchen's area of expertise, even if they're otherworldly.
Yeah, and my area expertise is not large by any means, right? So no. Let's take this idea. Somebody comes to me and they say, we've started this business, and it completely is an extension of my 20 years of corporate experience. And would you, I'll buy you coffee. You don't have to pay your coffee. And since we are old friends, old acquaintances, would you mind sharing your first initial thoughts? I said, of course. Yeah, that's a whole different question. And my answer would be, of course. So in this particular case, you can either start by giving me as many data points as possible, and try to fill in my knowledge level, so to say. Mm-hmm. And I will. I normally, after that, it's you guys need to talk to Techstars. Guys need to talk to so and so, or first of all, write your business plan. Right?
I guess not many people actually do that.
You'll be surprised. So write your business plan as if your life depends on it. And I'm more than happy to prick holes in your business plan, because I think that is definitely in my realm of expertise. And then you can find yourself another victim to go through your business plan and see what the second feedback round is.
I would like, if you allow, specify a question a bit. We are very much interested in business operations, in like the inner workings. We focus on business processes. We understand that when there is a startup idea coming to you, they don't probably have established processes where they can just give you like this big folder of printouts and say, okay, this is our documentation. But how do you accept? We are our audience is probably not going to pitch anytime soon, but it might be pitched too. So the question is, what red flags around, let's say, operations or the way people talk about running their business, or are there any questions you ask them to understand if they can actually execute? Because one thing is an idea for a startup. So let's make a time traveling machine. Yes. And we know how to do it. And another one is to actually make it happen. Like, I understand you need to have some backgrounds in physics and stuff like that. Probably, I don't know, maybe science fiction literature PhD is sufficient. But the idea is, how do you, I don't know, acid test if these guys can actually deliver anything? Or is it even important to you?
Of course, it's important. It's just, first of all, so I currently reside in the United States, and it's a huge cultural significance if you deal with a startup founders who are American, who are used to operate in the United States, versus, let's say, PhDs from Central Europe, versus entrepreneurs or corporate warriors with 20 years of experience from Northwest Europe. So what I'm trying to say is, if you listen to an American startup, they will say everything is bright, shiny, and awesome. Everything is amazing. And their track record is amazing, even if they only have 2 years of corporate expertise before they broke out into their own entrepreneurship. Whereas I think from a cultural point of view, some other cultures, specifically in the area that I mentioned, you would rather have, well, I only have 22 years of a corporate experience, and before that I only did my PhD, in a subcategory of this space. So I think my background is sufficient, and my business plan, we only had it looked at by 3 sources, and yeah, I think we can make it work. I think we have a good head start. I think we're on solid ground, whereas the other pitch is already like super extravagantly exaggerated, you see? So you need to recognize, first of all, who you're dealing with. And as one of my opening comments, I honestly think that if somebody starts a business as an extension of their core knowledge, one, so the founders are credible. I want you to make that word as one of the key words that is credibility. And second of all, is there going to demand for whatever you're going to offer, right? And that question is predominantly, first of all, to be answered by the people who are pitching this idea. And and now the funny exaggeration of the North Americans versus a sober looking European is going to differ, right? So if I'm going to walk away after the 20 minutes of pitch, and the two PhDs from Northwestern Europe says, we think we can make it work. We're only trying to raise $500,000, and the other party, late 20s with let's say Stanford degrees, but with 18 months of corporate experience, but otherwise a very colorful resume. It says, "We're ready to rock and roll. We got the world by its crown jewels, and this market is just so ripe for disruption." You go home and you're really gonna think like, "Oh, where shall I put my money?"
So, in your experience, not with working with startups, what was the craziest idea that you were ever presented with? I know you've told me some when we spoke before. You told me some pretty interesting stories.
So, gentlemen, let's not first of all put me on the same pedestal as Andreessen Horowitz or anybody. Yeah, my portfolio. I have 14 private investments. I've enjoyed going to loads of what they in America here they call presentation days from those incubators, and I've had my fair share of pitches thrown at me. Okay, so the craziest one, I have not prepared for this question, Artur. I would say, and maybe it's because it's one of the most recent ones, it's dog toys. So
I thought you'd bring up this because I thought it was pretty interesting when you told this to me before.
Yeah. So I think I'd like to use that. Obviously, anonymous. I won't mention the name of that person.
Of course.
Unless you want to praise them.
I do want to praise them. Yeah, I do want to praise them.
We don't mind, speaking aloud good things about people. We try to hash out if we are complaining. But if you feel like letting the word out, please feel free to do so.
Yes, Marian. I grew up in Northwestern Europe. Any praise can very easily
spoil a person.
Spoil into complaining. Okay. So Ivy League graduation, late 20s person. Before he started this particular company, he, according to his deck, has 20 patents under his name, and that's how he basically finances his life as an entrepreneur. He drove a very nice car, a car that a nice car, and the idea. I mean, he has computer science background and mechanical engineering, a combination of that, from Ivy League. So, very pleasant person, super bubbly. Anyways, dog toys. So not only just any dog toy. No, it's a dog toy made out of super advanced materials in which you can put dog snacks in that will guarantee the owner X amount of time of peace and rest, because the dog will be busy chewing on that toy in order to get the snack out for a guaranteed minimum amount of time. So,
as a dog owner, I'm already sold.
So
your dog Artur, if I remember correctly, chewed through the fireman's hose So I'm not sure. I think he would be a good beta tester for it.
Yeah, it only costs you a minimum investment of 50,000 to get a better product, Artur. I can connect you up. So, and then, during my meeting, and my first meetings, I always, and maybe this is an interesting point, I always encourage them not to try to walk me through the pitch book. I mean, you have me half a meter distance from you. Really try to capture the moment of what really makes you tick, what makes your product tick, instead of walking me through a deck. You can give it to me, or you can send it to me later, and I think that is a much better time spent.
I think this is excellent advice.
Yeah, look somebody in the eyes. Speak, listen, reflect. But anyways, so he had very good data. I mean, Marian, you're being the friendly neighborhood data guy, because he was a Ivy League computer science guy. He actually switched from mechanical engineering midway to computer science because he couldn't rely on fast enough turnaround of data crunching and computer
Power.
How do you call it? Scraping data.
Mm-hmm.
So that's why he felt the need to switch. But he was a mechanical engineer, inventor by through and through. His whole DNA was an inventor. And also his 10 patents were all mechanical items. So I went home. I looked at this deck. Aside from grammatical errors from Ivy League guy, my main advice to him was product SKUs, scalability of it. Each needs its own model of scalability. Where is the baseline scenario, medium case scenario, bullish case scenario, bearish case scenario? And that tied in with if you have another product line. So in his particular case, he had a subscription model planned out, and that was the unique selling point. Yeah, the subscription model, like your Nespresso crap, like your Hewlett Packard model, right? He sold snack cubes on a subscription model that you can put in this amazing thing. You unscrew it, assuming the dog cannot unscrew it himself. You put it in, screw it back in, dishwasher safe, what have you not. That was his unique selling. Okay, he had other SKUs, but they were all, maybe I would say, I'm not a dog owner, a extreme version of a regular dog accessory. Mm-hmm. So I don't want to get into that. So anyways, modeling of SKUs, modeling of your repeat business line, and then merge those two into a coherent people to see with ADD. Yeah, boom, you see it straight away. So that was my free advice to this gentleman. He didn't even buy my coffee. And you know how much a coffee costs in the United States these days? It's $4.50, and they automatically slap 22% of a tip on top unless you swipe that to the left. Yeah.
Per gallon or?
Yeah, for a double espresso, Marian.
Oh, no, I lived in the United States like 20 years ago, and I was a student back then, so there were elder guys buying me coffee. The guys from my lab just
you were a student.
I were once. Yes. I'm sorry. I finished my studies within 5 year studies within 3 years as the only one in the history of my faculty. But yes, I've been a student for a short time. I
So
finished it
does
by
it
the
make
time most of the
sense?
people drop out.
Yeah.
Okay, so this what you said about giving him advice leads to another thing that I wanted to ask you about. So when you give actually advice to people, how do, in your experience, how do people take it, and what how do they react? Do they take the advice? Do they are they happy that the advice is offered, and whether they actually apply it?
Good question, Artur. And I think your question needs to be split up in 3 segments. One is free advice, which is in this particular case, the reception was very full of gratitude. And as smart as this person is, his reply was with that gratitude and with lifting the veil, saying, "Man, that is so great. Can I send you my next deck? Can I run by my next model by you?" My reply is, "I'll do my best." So that is number one. Free advice people take with gratitude. All right?
Mm-hmm.
The second one is my portfolio companies. I can tell you every single one of them, of the 14, I do not interfere with them anymore. Maybe that is enough answer to your question, but I will not be as mysterious. So companies where I actually put an investment in, where some of these companies where I actually went to have sessions with the CEO, founder, because I liked that person. Otherwise, I wouldn't have put money in. I saw potential. So then the reception is also amazing. Session, amazing. And then it normally peters out. Very receptive to core advice, less receptive to detailed advice, so to say, as detailed as an outsider even can get, right? One would ask. So maybe I can color this in with an example, Artur.
Of course.
As a company already did, I think, 2 seed rounds. And at that time, when I was introduced by a friend who was very, very bullish and very enthusiastic about that particular company and their scalability and etc. etc. So I investigated more. I had meeting with the CEO. I had, and this is something I tend to do. I requested a meeting with 2 board members, and in this particular case, that both the board members were very successful entrepreneurs. Not one but 2 huge exits in the tech sector, as not particularly relevant to that business that I was going to invest in, but the confidence of a serial successful entrepreneur and his feedback was amazing. And I'm still friends with that particular board member. I'm not in regular contact with the CEO, but with the board member, yes. And the other board member I spoke to specifically in this space had a huge monetary exit in a similar product. So I decided to write him a check. And as being a finance nerd myself, first thing I did was, go comb through the projections, and he gave me all the uncensored spreadsheets of the SKUs and the scaling and the conditions and everything. And it's not that I like to rebuild other people's spreadsheets. I mean, nobody likes
Who
to
does,
do that,
right?
except for the two of you. And
No, absolutely. We put them not spreadsheets. We put them into database and then work on them.
yeah. So yeah, you make a spreadsheet even better by making it more usable and massagable, right?
I'm kidding. We hate it. We like checking somebody else's models is like, I don't know. I have kids, and sometimes I need to check if they brush their teeth. I would compare it to that, I think.
Yes. Yes. So, but anyways, so once you write a check, and you have the energy and you have the time, like myself, their feedback, their receptiveness peters out. Is the short answer to a long introduction. And then in this particular case, I was on a standing invitation, open door to their board meetings. And in the board meetings, listening to their growth ideas, expansion ideas, and very early on, I already started throwing out really viable different expansion arms that were easy to tap into without changing your business, and etc. And it was always received as great input, but
One
it took
day,
them 3 odd years, and then it was only my board member friend who actually admitted in one of the board meetings, saying like, wasn't that those 2 expansion points, wasn't that one of the ideas that Yuchen mentioned like 3 years ago, right? So receptiveness, lip service versus action, you can put a Grand Canyon in between.
So can it be kind of summarized as in, the moment you give them the check, they say, okay, thank you, now we'll do our own thing?
The Americans, the ones that I've been dealing with, are very good at giving the lip service, but just not actioning.
I think Artur was leading to the topic of personalities of the people. If they are entrepreneurs and they are willing to take risks, they must have internal stubbornness in them, I guess. It's a cost to be incurred. Like, if you want someone stubborn enough to start his own business and try to drive it through, you maybe should expect them to be a bit hard-headed, if you know what I mean.
Yes, and fully 100% agree. The ones I've met, I think the good. I see that as a strong pro point for them to succeed. Any literature you read, is will confirm this in the startup world. And look, I mean, didn't you guys just read Adam Newman got a $350 million check from Horowitz? It's not like he's a poster boy entrepreneur.
I think
But
it's a
he
wide
is.
topic. It is. It is. I don't think we are. I feel competent to discuss this topic. Like, I don't understand the decision personally. That's what I'm trying to say.
I'm not trying to get into the decision making. Why they did that? It's more certain people have the entrepreneurship and the drive to perpetually create in them. And in this particular case, track record is very important, right? Because, and that was one of our first topics. What do you look at? Well, if somebody who used to do serial marketing now all of a sudden starts trying to do a data based automated real estate business, right? There's no track record. So to that point, personalities, yes. However, one other company and the board, I've mentioned to the board many times that there is the problem is with the CEO. Talented CTO, boom, left after 18 months. Talented marketing officer with a strong track record, boom, was a female, left after 6 months. The chief production officer kept on calling me, complaining. I mean, why would he call me, right? I only met him once. Complaining about the inconsistency of behavior from the CEO. So myself, couple of other angel investors, we actually wrote a letter to the board telling them that and advising them or asking them to please consider replacing the CEO, who was the founder. And their reply to us was, we have confidence in them, and but we will take your whistleblowing to heart. We will incorporate more those points in a 360 with them regularly. So there you go. Personality is I think a huge measure point in your data.
That's when
you mentioned something interesting about serial entrepreneurs, and this is something I want to kind of ask you about, because I always see kind of people who are literally serial entrepreneurs with a lot of skepticism. They have all these ideas, they create a business. The moment it kind of lifts off the ground, they lose interest, so they sell it to someone else, and they're off with another idea. Are they really creating viable businesses, or are they just spawning these kind of shell companies that someone else has to then really build up and nurture into something that is, that is sensible?
So Artur, if you put one investment dollar, be it $1, be it whatever zeros there are behind it in a company at the startup stage, i.e., seed stage, which if you start a company with all your with your equipment, with your know-how, you can easily value it as $1 million, correct? So you put seed money in that, and this entrepreneur, has track record in this space, and within 24 months, they get an offer for $4 million. Me as an investor, I go, dude, sell it. My return within the 24 months, with a little bit of dilution, let's assume they did another one or two seed funding, right? With the dilution, I make like 3x.
Mm-hmm.
I'll take it. I advise you to take it, especially if you know that this is that particular business is not super exclusive. It's just a business idea, right? That it could be made something out of. It's not like you have the an amazing exclusive idea, right? If you're sitting on a patent a book of patents with mRNA track record of, well, you would not settle for a small exit because everybody, including your board, thinks the potential for the humankind as well as for the bottom line of the company is as such. So one element, that was my first reaction to your point. And you can consult the literature out there, right? For every how many companies that succeed, how many actually have failed prior to that. I mean, that's just history.
Is it really success if you just sell it to someone else, make it someone else's problem, and move on? Is selling a company success of the company?
You can answer that. So you just started a company, and within foreseeable time, right before you get tired of being your own employee, and somebody comes around and offers you 5x. You can turn around and do another, after your non-compete clause, you start another similar company. Done. I mean, the 5-10x will give you plenty of time to play with your dog and your kids and annoy your wife enough that your wife will say, oh, is your non-compete clause over? Why don't you start another gig? Yeah. You know what my wife says, Yuchen? The desk that you sit at, that beautiful piece of design, used to be mine till you stopped working, and now you're taking over my desk. She there's nothing more she'd like if I took a job or offer somewhere else.
Are you for a taking?
Sorry?
I'm asking if you're for taking. For taking. No, for taking. If we can poach you from your wife.
So, is that enough answer to your point?
Yeah, it's a great point. But on the flip side, I mean, Marian and I were talking earlier today about a different problem, because some of our services are to startups, where we work with some startups to work on their operations. And it's very hard for us to actually reach to those startups through investors like yourself. It's much easier to reach to the startups that if we manage to get to them directly, because it seems like a lot of investors are they want to reach an IPO stage or a selling stage as quickly as possible. So you can't say they're not interested in the business or the well-being of the business. By all means, they're interested in the well-being of their business until the sale. Almost like pump and dump, but it's obviously it's not the same. But it's make it into the next stage, sell it. What happens after that is not really a problem. So would that kind of mindset be preferable, or really bringing a company? In Victorian times, people were very proud of companies that lasted for hundreds of years,
and most of them died in the last 20 or 30.
Yeah, but it's because the mindset changed, right?
So I applaud if I applaud for any incubator to pick a company that becomes a verb, right?
Mm-hmm.
But that's just not possible to have, if you have a portfolio, to assume or to even to hope that a large number in that portfolio will become a verb. It's just not. It's just not possible. So in order to and in order to continue with your activity or as an incubator, and that's the nature of incubation. It's like you feed the baby, you clean the baby, you dress the baby, you hand it over, right? The baby grows. And maybe that's not a good analogy, because the next thing I wanted to say is, once the toddler is walking, you might want to see if that toddler is walking in the direction you were hoping, or if this toddler really, has no potential, in which case you advise them to please liquidate if there is a offer on the table.
Yes, this analogy wasn't the best one.
It was not the best analogy, but it was the best spontaneous thing I had. Okay, but you get the point.
Yes, absolutely.
As you nurture a startup, as you guys will be doing, at some point you just say, I'm going to cut my losses. If there's a potential offer on the table, I'm going to advise you to take it. So, and maybe this comes back to one of my other companies, which I think I invested in already in 2013. And, zero change in valuation. I was actually, around Christmas time every year, I check on them to see if their website is still up and running, and then reach out to the founder and see if I can get an update. So in a case like that, after 9 years, if he's gonna say, I can sell it for 2.5x, I would say, please do. You see what I'm saying? After 9 years, I mean, it is your lifestyle. You might be drawing a small cash flow. You might be employing 2 employees. It is nothing else than our used to be back in Europe, our neighborhood candy store. Whatever cash flow they were generating, just enough to pay your ongoing fixed cost, and not even regarding the real estate, because the real estate was passed down by the grandparents, right? So there is no viable, from a business point of view. It's just the only attraction is we want those businesses in our neighborhood towns. But in this particular case, as the startup, it's just,
I guess there is a slight difference between a portfolio and neighborhood.
Yeah.
I'm not friendly portfolio data guy. I'm friendly neighborhood data guy, so I would know. But you mentioned one. We still have a couple of minutes, if you allow. One thing that you mentioned at the beginning is like, show me data points. Like, what data, except maybe for financial or in financial, are there any specific data points that you really want to see when you are talking to startups? Something that I'm really wondering, because one thing that I didn't hear and I hoped to hear is like the two biggest red flags. You talk to someone. One I incurred is like, this is the business that is outside of your area of expertise, and you don't feel confident. You don't want to spend time learning all about rocket surgery to be able to confidently evaluate the business. But like, something that people show or do that tells you in your experience, oh my goodness, no, it's a waste of time. I will pay for my own coffee, just go away.
Yeah. So first of all, the data point that sets apart a well-prepared pitch from a not so well-prepared pitch. So if you want to, the dog toy person was able to show me the annual dog toy market split up in the top 3 income generators. And that is data. So the one other company, by the time I invested, they were able to show me the competitors, how deep their knowledge was based on data of their sales and their ramping and the outlets where they sold, multiple data.
So it's a market. It's a deep dive into a market research, market data that shows you the business potential for the product and for customers. So could we sum it up in this case? If you want to invest,
Yes.
make sure that at least your people know exactly what is happening on the market, where they actually try to tap into.
Visibility, right? It's called visibility. It's in the land of the blind. I mean, even if that founder has one eye,
Mm-hmm.
everybody will see. Everybody see that he has added value.
Okay, and the red flag?
The red flag. I mean, the red flag is track record. Track record is a red flag. Unfortunately, a lot of red flags will come up after you've written the check. Yeah, by that time it's too late. But I would not. First of all, now I do not invest in startups anymore. I've cut my teeth, and it is hubris from my side to assume that I can be more successful in picking startups than let's say a Techstar. I can just write a check to Techstar every single period. They come with a new fund, and go with the flow. So red flags are, that's what they call red flags. I mean, they are super hard to recognize, to see, and once you see it, it might be too late already. So, but since time of essence, one piece of advice I still have out there for you, gentlemen, is the one company I invested in. They started out as as a new tech media company, and now they have morphed into a little bit of an incubator, because they've become visible to other founders, other startups who saw that they had the capability and the track record in creating social media, a really good, well-spun homepage with deeper services. So they have pivoted into becoming a little bit of like a service provider to other startups. And then now you are going to point at the elephant in the room, which is payment. So they obviously have not been able to get payment, and therefore they are not even hoping for payment anymore. They, from the get-go, once depending on the attractiveness of that particular client's startup, and they negotiate equity.
This is something that I was.
Yeah.
This is something that we discussed, to be honest.
Yeah.
But it requires really something that you I think mentioned some, because then you have your skin in the game, and you put a real work that you could spend on doing something else. So it requires a big trust into in your ability to evaluate if this
Yeah.
client
And this is exactly the model of incubators like Techstars.
Mm-hmm.
That's exactly the model. I mean, we are going to try to shape your brain, shape your operations. In exchange, we demand minimum
equity
of X.
No, it's absolutely fair. It's like when you put your work, you take a risk, and I think Artur would be much better in explaining how this risk translates into the work dollars. I'm not so sure it's the white dollar or green dollar, but
Yeah.
work dollar invested into the company.
Yes, and then transparency is a huge thing, right? Because you are going to have investors, and then how is your investor going to be able to monetize on, let's say, equity that you as a company going to accept, because for this particular company, a retainer is in cash form is just not in the cards. But that doesn't mean you can have hybrid models of a retainer. If retainer is not feasible in the time block, then they automatically convert. It's like a convertible bond, right?
Yes.
You let them convert, and that is a space that you and I are easily one step ahead of other entrepreneurs. You can easily structure those things that it doesn't matter. You sign here, and if you can pay on the deadline or these times, and otherwise we just convert it into equity. So it means decision making pipeline for them is much easier, much faster.
All right.
And I think we've gone a nice circle from as an investor, you want companies, you want entrepreneurs who you can understand, and entrepreneurs should be picking investors that they can relate with and that can understand them, so that the communication goes both ways and the advice that's received can actually be applied. So I think this is the key takeout, that there has to be a reasonable bond and common understanding between the investor and the entrepreneur to actually make it work.
I would take another lesson. Flashy promises of skyrocketing returns from American entrepreneurs should be taken with a pinch of salt.
From anybody, because these days Europeans can go to Ivy League universities in America too, Marian.
Oh.
You were once a student in the US, right?
No, I was working at the San Diego Supercomputer Center. I was student in Eastern Europe. In the States, I've been a professional, so to speak. So, but I stand corrected, sir. Thank you.
I think this is all we have time for. Thank you very much, Yuchen, for the experiences you've shared. It was very interesting, and let's hope it's of use to someone.
Thank you for listening.
Don't miss the next episode where we will be discussing the role of ego in execution of business processes.
Subscribe on your favorite podcast platform or visit bdr.show to find out more about the future episodes and guests. You can also check out cognition.llc for more information on Cognition Shared Solutions, our services, and other events hosted by us.
For now, it's thank you from myself, Artur and my co-host, Dr. Marian Siwiak.
Thank you.